What's up, everybody? This is the Gore report checking in for September 29th as we wrap up the third quarter and head towards the fourth quarter. As usual, let's briefly jump into what happened last week. Let's start with the PCE reading, Personal Consumption Expenditure, which came out on Friday. PCE is the Fed's preferred measure for tracking inflation. So for August, PCE came in line with expectations. Okay, so let me give you the rundown. PCE year over year was in line at 2.7%. Core PCE, which excludes energy and food, year over year was in line at 2.9%. PCE month over month was in line. Core PCE month over month was in line as well. So what does all this mean with all these letters? What does it really mean? It means overall inflation is tamed. Now, that could all change when these rate cuts digest into the market. However, a bump up in inflation, let's say above 3% from the 2.9 that it is right now, is not a big deal. It's not a big enough deal to keep rates high and fast lane this economy into a recession. I personally think the Federal Reserve's 2% inflation goal was misguided. There is nothing wrong, in my opinion, with the economy having 2.5% or 2.9% year over year inflation. The economy can manage that level just fine. 3% year over year inflation is more manageable than the 9.1% year over year inflation we had in 2022, and we had gas prices super high. So PCE is now tamed. The last PPI and last CPI readings came in favorable, and now we are officially in the easing monetary cycle, which we've been looking forward to for years now. On to other news. Last week, we also had more strategic alliance news. After NVIDIA, Intel, and Oracle and OpenAI, there are rumors swirling that Apple is interested in a stake in Intel. Intel is pushing to secure financing for its chip business. Interest rates are coming, so big tech companies are interested in doing these strategic deals. Now, these are just rumors right now, but let's take a rundown of strategic alliance financing deals Intel has done over the last 2 months. First, we had $5 billion investment from NVIDIA. We had a $2 billion investment from SoftBank, and we also had the United States government taking a 10% stake in Intel. A deal with Apple would be a powerful vote of confidence for Intel because Apple is very conservative with its strategic alliances. Apple really doesn't do business with other businesses. They like to keep to themselves for the most part. But make no mistake about this. These deals are all about taking the power out of China and making the U.S. less reliant on Taiwan. This current administration, the White House, is clearly encouraging U.S. big tech to invest in domestic tech and build a domestic manufacturing powerhouse. After years of mediocrity, the government wants that foundry powerhouse to be Intel. Anyone who knows me knows I make fun of Intel all the time. I think they're just behind the curve and they should just be further along than they are now. Now, there's no guarantee an Apple-Intel union will happen, but it's more than worth keeping a tab on. So moving on to this week, what are markets watching? Obviously, the government shutdown. That's going to be the talk of the week. The deadline to pass a funding bill is this week. One thing is for sure is you can expect volatility in the market this week. Usually these shutdowns are mainly political theater. The bark is usually bigger than the real bite. One side eventually caves. Now, I will say this. In this case, the Republicans have the upper hand because they wouldn't mind a government shutdown. And why do I say that they wouldn't mind a government shutdown? The shutdown will be an excuse for Republicans to basically reduce government employees because they feel like the government is too big. So you can expect the Democrats to cave if there is a shutdown eventually. So pay attention to how that situation develops and how the market reacts to it. So you'll hear a lot about it on these different news channels, but, eventually it gets resolved. On the earnings front, Nike reports on Tuesday. The street's earnings expectations are for 27 cents per share, while the street's revenue expectations are for $11 billion for the quarter. The key area to watch, of course, the impact of tariffs, which management has already said would negatively affect Nike's gross margin. The earnings call will be more than interesting. How much of these tariffs is Nike eating, basically not pushing off to their customers? That's what investors will want to hear for the most part. Looking at the future markets right now, what government shut down? What government shut down? Stock futures are heavy in the green. Dow futures are up 140 points, a third of a percent. The S&P 500 is up 24 points. That's also a third of a percent. And the NASDAQ futures are up 114 points at a half a percent. Have a great week. Go Report checking out.